Well, here's a part of the national summary of the Beige Book. Overall economic activity expanded slightly on balance since late February. 10 out of 12 districts experienced either slight or modest economic growth. That's up from 8 in the previous report. Well, the other two reported no change in activity. Molly, consumer spending barely increased overall, but reports were quite mixed across districts and spending categories, with several reports mentioning weakness in discretionary spending as consumers' price sensitivity remained elevated.
Yeah, I think the way that I was reading this is that it seems like a lot of these main parts of the economy that we look at, whether it's consumer spending, the labor market, inflation, all just seemed a bit stagnant compared to the last report, which was in February, I believe. So, and it kind of makes sense, right? I mean, especially with inflation, that has certainly been stalling out, and the progress that is on disinflation. So that has really not been happening. Consumer spending still chugging along, and there definitely is heightened price sensitivity across a number of categories. I think what I found pretty interesting in here was maybe a little bit more optimistic about the direction of the labor market in terms of it normalizing and wages getting more back in their pre-pandemic kind of trend, and that these businesses are saying that they expect the supply and demand of workers to be relatively stable, that job gains are going to be modest going forward, and still moderation back of wage growth back to those pre-pandemic levels, which I mean, so far though, that hasn't really happened, right? I mean, we've seen, I think we would call the job gains we've had much more than modest.
Agreed. Right. We keep talking, I feel like, in our conversations about the strength that we are seeing when it comes to the labor market. Wages is certainly something that the Fed focuses on. So does everybody. Wages growing at a moderate pace in 8 districts, with the remaining 4 noting only slight to modest wage increases. Multiple districts said that annual wage growth rates had recently returned to their historical averages. So that's also interesting.
Yeah, it seems like a bit of just maybe moving sideways at the moment, but if anything, not really additive to inflation or stoking inflationary pressures, which is positive for the Fed.
Real quickly, 30 seconds. So how does this support, refute, if you will, what we heard from Fed Chair Jay Powell yesterday that kind of jolted the rates market again about rates high for longer?
Yeah, I mean, I think this is maybe a bit more tame, saying that, but it's also not really refuting what Powell said. I mean, it's saying that inflation is really moving sideways right now, and that is very much what we've seen at the start of this year. It's just not coming down.